right, so get this. We're going deep into Roche's world in 2024. And let me tell you, this is not your typical boring corporate report.
Definitely not light reading.
No, not at all. We've got their annual report. We've got their financial statements.
Packed with insights, though.
Oh, yeah, totally. But let's be honest, they're about as fun to read as like an old phone book. So that's where we come in.
Yeah, consider us your financial decoders.
Exactly. We're going to sift through the jargon, cut through the numbers, all that corporate speak, and we're going to uncover what's really happening at Roche.
The good stuff.
Yeah, the strategic shifts, the big bets they're making, and really a glimpse into the future of this pharmaceutical giant. And get this, we're starting with a 4.6 billion Swiss franc shocker.
That's billion with a B.
Billion with a B.
A big B.
Roche took a massive hit in impairment charges this year.
Yeah, it definitely raised some eyebrows.
Oh, yeah?
We'll definitely unpack those charges later, but first, let's just get a sense of, the lay of the land. Roche's total revenue for 2024 hit 60.5 billion Swiss francs. So that's a decent 3% increase from last year.
Not bad.
Not bad.
But wait, there's more. At constant exchange rates, that growth jumps to a whopping 7%. So what's the deal with this constant exchange rates thing?
So think of it like leveling the playing field.
Okay.
The Swiss francs, it had a really strong year, which can make the numbers look, a bit deflated.
Yeah.
Constant exchange rates, or what we call CER, lets us kind of see how the business truly performed, stripping away all that currency drama.
Gotcha.
So in reality, Roche's business grew faster than those initial numbers suggest.
So CER is it's like looking behind the curtain and seeing how the real wizardry is at work.
Exactly.
Okay. Now, Roche has two main divisions, right?
Yep.
Pharmaceuticals and diagnostics.
That's right.
Did they both kind of ride that growth wave?
So pharmaceuticals, they were definitely surfing. They pulled in 46.2 billion Swiss francs, a 4% increase in Swiss francs, but a more impressive 8% at CER.
That CER magic strikes again.
There it is.
Okay, what about diagnostics?
Diagnostics saw a slight dip, actually. Sales down 1% to 14.5 billion Swiss francs. But even here, the underlying story is positive.
Okay.
At CER, they actually grew by 4%.
Oh, interesting.
So again, the strong Swiss francs kind of messing with the optics a bit.
Yeah, interesting to see how that currency can really swing things around. But, those eyebrow-raising impairment charges, I have a hunch those are hiding out in the pharmaceuticals division. Am I right?
You are.
Okay.
And that's where we're going to really start digging.
Okay.
The pharmaceuticals division, they went through some serious shakeups in 2024, including a hefty restructuring plan.
Yeah.
And of course, those massive impairment charges we talked about.
So let's talk restructuring first.
Yep.
Roche dropped a cool 1.891 billion Swiss francs on this in 2024.
Not messing around.
No, that's not spare change. Where did all that money go?
So the biggest chunk, 827 million Swiss francs, went to closing down sites and dealing with other costs related to, physical assets. Then there were employee-related costs, which came in at 492 million Swiss francs.
Wow.
And another 812 million Swiss francs was categorized as other, reorganization expenses.
Okay, so site closures, potential job cuts. Sounds like a whole lot of shuffling going on. So it sounds like Roche is hitting the reset button on a grand scale. What's behind this major overhaul? Is it just about cutting cost?
It's bigger than that.
Okay.
Roche, they're aiming for what they call productivity initiatives. Think of it like spring cleaning, but for a multi-billion-dollar company.
Okay, yeah.
They're streamlining, shifting resources, and really getting ready for the future. In this fast-paced world of pharmaceuticals, you've got to stay agile to stay ahead.
So it's not just about trimming the fat. It's about getting lean and mean, ready to pounce on those new opportunities.
Yeah.
Now, let's face those massive impairment charges head on. A total of 4.6 billion Swiss francs written off in the pharmaceuticals division. That's a tough pill to swallow. But before we get into specifics, could you break down what goodwill and intangible assets are in a way that even I could understand?
All right, so think of intangible assets like a company's secret sauce,
Okay.
The things you can't touch, but are still incredibly valuable.
Okay.
Things like patents, trademarks, even that killer brand reputation. Goodwill is a bit trickier. Let's say Roche buys this hot new company.
Okay.
For a price that's higher than what their stuff is actually worth on paper.
Okay.
That extra that they pay, that's goodwill. Basically, the price tag for the potential,
Yeah.
the hope that this acquisition is going to be a home run.
So it's the bet they're making on the future. Okay. Now, where did these big write-offs hit?
The biggest ouch was in goodwill. 3.2 billion Swiss francs, all gone, poof.
Wow.
Specifically, they completely wrote off the goodwill related to their Flatiron Health and Spark Therapeutics acquisitions.
Wait, completely written off? Like they're saying those acquisitions are worth nothing now? What happened there?
It's not quite that dramatic.
Okay.
What it means is that Roche took a hard look at these acquisitions and decided that the premium they paid, that bet on the future, it wasn't paying off the way they expected. It doesn't mean those companies were failures, but it does signal a shift in Roche's strategy, a change in priorities.
So maybe they're moving away from certain areas or realizing that those big bets didn't quite hit the mark.
Yeah.
It's fascinating to see these strategic shifts play out in real time. What about the remaining 1.4 billion Swiss francs in impairments?
That was spread across other intangible assets. The report mentions write-downs for a bunch of reasons. Some drug development programs got scrapped, sales expectations for the cancer drug, Rosley-Trek were adjusted, even some partnerships were terminated.
So a mix of internal decisions and external forces at play.
Yep.
These impairment charges are like a window into the high-stakes world of pharmaceuticals.
Exactly. And remember, while these write-offs, they sting on paper, they're often a necessary move. It's about being agile, admitting when something isn't working, and redirecting resources to where they can have a bigger impact.
It's like ripping off the Band-Aid, accepting the past and moving on to a healthier future. But enough with the doom and gloom. Let's talk about some of the stars in Roche's pharmaceuticals portfolio. Surely there are some products exceeding expectations.
Absolutely. Vabysmo, for example, is killing it.
Vabysmo, the treatment for eye conditions.
That's the one. It raked in a cool 3.9 billion Swiss francs in sales in 2024, with strong growth across the globe, especially in the U.S. market.
So Vabysmo is a clear winner, defying the odds and boosting revenue. But I recall reading something about Lucentis, another eye treatment, kind of struggling a bit. What's the story there?
Lucentis is facing some headwinds, likely due to competition from newer treatments, including Vabysmo.
Okay.
It's the circle of life in pharmaceuticals. New drugs emerge, competition heats up, and older products, they feel the pressure.
It's a reminder that even giants like Roche have to constantly innovate and fight for their market share, like a never-ending game of king of the hill in the pharmaceutical world.
Very much so. Now, you mentioned earlier about Ronapreve sales being minimal compared to 2023.
Right, that one kind of jumped out at me. I'm guessing the pandemic hangover is kicking in with demand for, COVID-19 treatments fading.
Exactly. Ronapreve was a star player during the pandemic.
Yeah.
But as the world moves on, those specific treatments are becoming less and less essential.
Right.
This goes to show how even global events can have a ripple effect on a company's performance.
Yeah, it's a wild world out there. We've seen blockbuster successes, competitive battles, the lingering impact of a pandemic, all within Roche's product lineup. I'm curious how these dynamics play into their overall financial health. What about their free cash flow?
That's where things get really interesting. Free cash flow is like the lifeblood of a company. It's the cash they have left over after paying the bills and investing in their business. It's the fuel for growth, acquisitions, dividends, that all-important rainy day fund.
So more free cash flow equals more options, brighter future.
Exactly.
How did Roche fare on that front in 2024?
They did exceptionally well. Free cash flow jumped from 13.6 billion Swiss francs in 2023 to a hefty 16.6 billion Swiss francs in 2024. That jump in free cash flow, it's crucial. It gives them the financial firepower to make bold moves, like acquiring Pasaya and diving headfirst into the world of CAR T-cell therapy.
Hold on, CAR T-cell therapy. What's that all about?
Imagine this. They take your own immune cells, give them a superpower upgrade in the lab, and then send them back into your body to fight cancer. It's like a personalized army of super soldiers. Cutting-edge stuff, and Roche clearly sees its potential.
That's incredible. So Roche is flush with cash and ready to make some big moves. But what about their debt? The report mentioned they've been issuing bonds and notes.
Right. Companies often issue debt to raise capital for all sorts of reasons. Could be to fund those big acquisitions, invest in new projects, or even just refinance existing debt. Think of it like taking out a loan to fuel growth or manage their finances.
So debt isn't necessarily a bad thing. It's more like a strategic tool in their financial toolbox.
Exactly.
But of course, too much debt can become a burden. Is there any indication that Roche might be overextending themselves?
Not necessarily. Roche is a financially solid company with a proven track record. However, the report does point out that their results, They can be sensitive to currency fluctuations. Remember that strong Swiss franc? It can make their numbers look a bit wonky.
Right, that currency roller coaster can be a wild ride.
Yeah.
But why does it matter so much for a global company like Roche?
Well, they operate in so many different countries, and they have to report their earnings in Swiss francs.
Right.
When the Swiss franc gets stronger, those earnings from other countries, they're worth less when they're translated back.
Oh, I see.
It's like a global currency puzzle.
So even giants like Roche can't escape the ups and downs of the global economy. All right, we've covered a lot of ground here, from revenue to restructuring, those eye-popping impairment charges, and even the currency conundrum. It's a lot to take in. But what about the road ahead? Any clues in the report about what's next for Roche?
There's one juicy tidbit that stands out: their acquisition of Poseda Therapeutics in early 2025.
Poseda Therapeutics. Tell me more.
They're a company focused on developing those CAR-R T-cell therapies we discussed earlier.
Ah, right, the cancer-fighting super soldiers.
Exactly. It's a highly specialized field, and this acquisition signals that Roche is serious about becoming a leader in this, game-changing area of cancer treatment.
Yeah.
They're not just dipping their toes in the water, they're diving right into the deep end.
Sounds like they're making a bold bet on the future of personalized medicine. But how does this acquisition tie into those impairments and restructuring we discussed earlier?
That's where it gets really interesting. It shows that Roche is actively reshaping its portfolio. They're pruning back in some areas, taking calculated risks, and investing heavily in others. It's all about staying ahead of the curve and shaping the future of healthcare.
So they're not just reacting to change, they're driving it. I'm already eager to see how this all plays out in the coming years. But before we get ahead of ourselves, let's take a closer look at what's happening in Roche's Diagnostics division. We briefly touched on their sales figures, but there's much more to uncover.
Absolutely. Diagnostics might not have the same blockbuster appeal as pharmaceuticals, but it's a vital part of Roche's business and a major player in the healthcare landscape. Let's dive in.
So we've explored the ups and downs of the pharmaceuticals division.
Yeah.
But let's shift gears and dive into the world of diagnostics.
Right.
It might not have that same, blockbuster drug appeal.
Right.
But it's a cornerstone of Roche's business and a major player in the healthcare landscape.
Absolutely. Diagnostics is all about those tests, that help doctors diagnose and monitor, everything really, from infections to chronic diseases. It's the behind-the-scenes hero of healthcare.
Right. Those tests we often take for granted, but they play such a critical role in getting us the right treatment.
Yeah.
We touched on diagnostic sales figures earlier, a slight decline overall.
Yeah.
But I'm curious about the story beneath the surface.
Well, what's fascinating here is that while their sales dipped a bit, their core operating profit actually jumped by 12% at CER.
Hold on. Sales are down, but profits are up. That sounds like some financial wizardry. How does that work?
So it's a sign that they're really laser focused on efficiency and profitability.
Okay.
Maybe they're streamlining their product lineup, getting leaner in their operations, or even, making some strategic pricing adjustments.
So they're doing more with less, squeezing more profit out of each dollar.
Right.
That's impressive. But what specific moves are driving this profit boost?
Well, remember those restructuring plans, those productivity initiatives we talked about in pharmaceuticals?
Yeah.
Well, it turns out diagnostics is also going through a similar makeover.
Ah, so they're applying that same efficiency mantra across both divisions.
Exactly.
Makes sense.
And they're not just cutting costs.
Okay.
They're also investing in innovation, particularly in what we call point-of-care diagnostics.
Point-of-care diagnostics. What's that all about? Sounds intriguing.
So think faster, more convenient testing, closer to the patient. Imagine getting your test results right there in the doctor's office or even at home, instead of waiting days for, lab results.
Yeah.
It's about bringing diagnostics into the 21st century, making healthcare more accessible, more efficient.
Yeah, that's a game changer. That would revolutionize healthcare as we know it. Sounds like diagnostics is really embracing the future. But let's get back to those all-important financials. How did diagnostics perform on that free cash flow metric? Remember, that's the fuel for growth and future investments.
Hold on to your hats. Their operating free cash flow surged by a staggering 48% at CER.
Wow, that's even more impressive than pharmaceuticals' cash flow growth.
Yeah.
It's a clear sign that diagnostics is a powerhouse, even with that slight dip in overall sales. They're generating tons of cash, which gives them a lot of flexibility for the future.
Exactly. They're in a strong position to invest in new technologies, expand into new markets, or even acquire some promising companies.
It sounds like Roche Diagnostics is firing on all cylinders. But let's zoom out for a moment and talk about Roche's overall financial health and some of the risks they face. We already touched on those pesky currency fluctuations, but what else kind of stands out to you in the report? What should our listener be aware of?
Well, Roche dedicates a whole section to risk management,
Okay.
which is a good sign. They're clearly aware of the potential pitfalls, and they're actively trying to mitigate them. They break down their exposures to various, financial risks, including credit risk, liquidity risk, and market risk.
Okay, let's unpack those one by one. What exactly is credit risk, and why should our listener care?
Credit risk is basically the risk of not getting paid. It's the possibility that customers or partners might default on their bills.
So it's about making sure they're not extending credit to unreliable partners.
Right.
For a company like Roche, with, a global network of customers and collaborators, that sounds like a pretty big deal.
It is. They need to carefully vet their partners, have robust credit policies in place, and constantly monitor their exposure just to make sure they're not taking on too much risk.
So it's all about protecting their financial stability.
Right.
Now, what about liquidity risk? That one sounds a bit more complex.
Liquidity risk is the risk of running out of cash. It's about making sure they have enough readily available funds to cover their short-term obligations, like paying their bills, meeting payroll, funding their operations.
So it's like making sure your checking account has enough money to cover those unexpected expenses that always seem to pop up. But for a massive company like Roche, that must be incredibly challenging.
It is. They're juggling multiple priorities, operational expenses, research and development investments, potential acquisitions, and even those unforeseen events like a global pandemic or a sudden shift in the market.
It sounds like a constant balancing act.
It is.
Making sure they have enough cash on hand to keep everything running smoothly while also investing in future growth.
Exactly. It's a high-stakes game of financial Tetris. Now, last but not least, we have market risk.
Market risk. What's that all about? Is it like the risk of the stock market crashing?
It's broader than that. Market risk is the risk that their financial position could be impacted by, any changes in market conditions.
Okay.
This could be interest rates going haywire, exchange rates fluctuating wildly, or even, the stock market taking a nosedive.
So it's about managing their exposure to all those external factors that are largely beyond their control.
Mm-hmm.
But how do you even begin to measure and manage something as unpredictable as the global market?
Well, the report mentions that they use something called value at risk, or VAR, to quantify this risk.
VAR. That sounds incredibly complex. Can you break it down for us?
Think of VAR like a financial weather forecast.
Okay.
It doesn't tell you exactly what's going to happen, but it gives you a range of possible scenarios, a sense of the potential storms brewing on the horizon.
Oh, so it's like having a crystal ball that gives you a glimpse into the future,
Right.
helping them prepare for those unexpected financial storms.
Exactly. It helps them manage uncertainty and make sure they're not taking on more risk than they can handle.
So we've got credit risk, liquidity risk, and market risk, all being carefully monitored and managed by Roche.
Yeah.
Sounds like they have a whole team of financial superheroes working behind the scenes to keep everything running smoothly.
They do.
But even with all their efforts, there are always those unforeseen events, right? The
Totally.
things you just can't predict.
Absolutely. The report acknowledges that the pharmaceutical industry, it's a volatile one. They're subject to, political whims, regulatory changes, unexpected scientific discoveries, even environmental factors. Any one of these things could throw a wrench in their plans.
It's a reminder that no matter how big or successful you are, you can't control everything.
You can't, which is why adaptability and strategic decision-making are so crucial.
Speaking of strategic decisions, let's circle back to those massive impairment charges.
Yeah.
Particularly the write-offs related to Flatiron Health and Spark Therapeutics. We talked about those strategic reassessments, the evolving priorities.
Right.
But I'm still curious, what specifically prompted those write-offs? What changed in Roche's thinking about these acquisitions?
It's like a financial mystery.
Yeah.
Unfortunately, the report doesn't spill all the tea. It's probably a combination of factors. Remember, Flatiron Health was all about using real-world data to improve cancer care, while Spark Therapeutics, they were focused on gene therapies.
Right. Those are both cutting-edge areas, but they also come with a lot of uncertainty and risk.
Exactly. Perhaps the development timelines proved more challenging than anticipated, or maybe the competitive landscape shifted in a way that made those acquisitions less valuable, or maybe, Roche's overall strategy evolved, leading them to prioritize different areas of research.
It's like they're constantly reassessing their bets, placing new ones, adjusting their strategy as the game unfolds.
Exactly. And those write-offs, while painful, they're a sign that they're not afraid to make tough decisions and adapt to changing circumstances.
It's all about learning from the past and making smarter bets for the future. Now, with all that said, are you ready to gaze into our crystal ball and see what the future holds for Roche?
Let's do it. We've laid the groundwork. Now it's time to speculate wildly about what might be next for this pharmaceutical giant.
Okay, so we've already discussed their acquisition of Basel Therapeutics and their big push into CAR-RT cell therapy. But are there any other hints in the report about where they might be headed? What other breadcrumbs can we follow?
Well, remember those global restructuring plans we talked about earlier?
Right.
The ones aimed at boosting productivity and freeing up resources for strategic moves.
Right, the big spring cleaning operation.
Well, it turns out those plans aren't just about becoming more efficient. They're also about creating the financial flexibility to make, even bolder moves, things like strategic acquisitions, partnerships.
So they're clearing the decks, getting ready to set sail for new adventures. But where might they be looking to expand their empire? Any specific targets mentioned?
They're keeping their cards pretty close to their chest, but the report does highlight their ongoing commitment to innovation and their focus on, key therapeutic areas like oncology, immunology, neurology.
Yeah, that makes sense. They're doubling down on their strengths, building upon their existing expertise, looking for opportunities to dominate those fields. But given the rapid pace of scientific advancements, I'm guessing they're also keeping a close eye on those, emerging technologies and new therapeutic approaches.
Absolutely. They're constantly scouting for, promising startups, groundbreaking research, potential game changers that could, shape the future of healthcare.
It's like they're playing a high-stakes game of chess, always thinking several moves ahead, anticipating their opponent's strategies, and planning their next power play.
Exactly. They're not just reacting to the market, they're actively trying to shape it.
And with their deep pockets, global reach, and unwavering commitment to innovation, they're well positioned to make some serious waves.
They certainly are. Now, before we get too carried away with our futuristic predictions, there's one more area we should touch on: Roche's dividend policy.
Yes, the dividend. That sweet, sweet reward for loyal shareholders. It's a key indicator of a company's financial health and their commitment to returning value to their investors. How does Roche's dividend policy stack up? Are they generous with their payouts?
Let's just say they treat their shareholders well. Roche has a long-standing tradition of paying attractive dividends, and 2024 was no exception. They proposed a dividend of 10.39 Swiss francs per share, marking the 36th consecutive year of dividend increases.
36 years in a row. That's incredible consistency, a testament to their financial stability and their commitment to sharing the wealth. But beyond the dividend itself, I'm curious about their overall approach to capital allocation. How are they balancing those, big investments in growth with rewarding their current shareholders?
That's the million-dollar question. Unfortunately, the report doesn't provide a detailed roadmap of their capital allocation strategy. But, we can get some clues by looking at their actions. They're clearly pouring a lot of money into research and development, as evidenced by their acquisition of Basel Therapeutics and, their numerous internal research programs.
Yep.
They're also actively pursuing strategic acquisitions and partnerships, as we've discussed. And, of course, they're maintaining their commitment to those, juicy dividends.
So it seems like they're striking a delicate balance between fueling future growth and keeping their shareholders happy.
Exactly. It's a tightrope walk, but they seem to be managing it quite skillfully.
Yeah.
It raises an interesting question, though. How might their priorities shift in the coming years?
Yeah.
Will they continue to prioritize, acquisitions and research?
Yeah.
Or might they consider other options like share buybacks or even paying down debt?
Those are some thought-provoking questions. It's a reminder that even for a giant like Roche, the future is full of uncertainties and strategic choices.
Absolutely. Now, before we wrap up this part of our deep dive, let's take a moment to, recap some of the key takeaways from our exploration of Roche's financial world.
Yeah, let's distill the essence of this financial journey.
Yeah.
What stands out to you as the most important insights we've gleaned from dissecting Roche's 2024 financials? What's the big picture narrative they're telling us?
Well, I think the overarching theme is that Roche is a company in constant motion.
Okay.
They're not just riding the waves of the pharmaceutical industry, they're actively shaping their destiny
Yeah.
through strategic decisions, bold investments, and an unwavering commitment to innovation.
That's a great observation. They're not afraid to shake things up,
Nope.
take risks, and adapt to a rapidly changing world. And even when they stumble, like with those significant impairment charges, they bounce back with resilience and a clear vision for the future.
Exactly. They acknowledge their missteps, they learn from them, and they keep pushing forward.
Yep.
That adaptability, it's crucial in an industry as dynamic and competitive as pharmaceuticals.
Absolutely. They're constantly evaluating their portfolio, making tough decisions about where to prune back and where to double down. And with their strong cash flow, strategic acquisitions, and partnerships, I mean, they're well equipped to navigate the challenges and capitalize on the opportunities that lie ahead.
They're like a master chess player, always thinking several moves ahead, anticipating their opponent's strategies and positioning themselves for victory.
It's been a fascinating journey, uncovering the financial inner workings of this global healthcare giant. We've seen both the brilliance and the blemishes, the calculated risks and the unexpected setbacks. But through it all, Roche's commitment to innovation, their unwavering focus on the future, it shines through.
It certainly has. But before we conclude our deep dive, there's one more perspective I think we should explore. We've talked extensively about Roche's financials, their strategic decisions, the competitive landscape, but there's another crucial dimension that we haven't fully addressed.
Intriguing. What other perspective could there be?
Well, we've been so focused on the numbers, the financial maneuvers, the strategic chess game, that we haven't fully acknowledged the human element at the heart of it all.
The human element. Of course, it's easy to get lost in the world of balance sheets and financial ratios.
Yeah.
But ultimately, Roche's work impacts real people's lives.
Exactly. Behind every drug, every diagnostic test, every strategic decision, there are patients whose hopes and fears are, intertwined with Roche's success.
It's a powerful reminder that we're not just talking about, like, abstract financial concepts here. We're talking about the health, the well-being, the future of countless individuals around the globe.
And that's ultimately what makes this deep dive so compelling.
Yeah.
We're not just analyzing a company, we're exploring the intersection of science, business, and humanity.
It's a reminder that even in the world of finance, the human impact is always present,
Yeah.
always shaping the narrative.
Well said. So, as we delve into this final part of our Roche exploration, let's keep that human element in mind. Let's go beyond the numbers and explore the stories, the impact, the hopes and dreams that, fuel this incredible industry.
Absolutely. Let's dive in. Okay, so we've crunched all the numbers, dissected all the strategies. We even looked into our financial crystal ball. But as we wrap up our deep dive into Roche's 2024 world, let's kind of shift our focus away from all those spreadsheets and towards something, well, a little more human.
Yeah, it's easy to get lost in the financial maze, but at the end of the day, Roche's work is touching the lives of millions of people all over the world.
Exactly, and we talked about their global reach, right? They have subsidiaries everywhere from Algeria to Zimbabwe.
It's a huge footprint.
Yeah, it's massive. And that means they're navigating, not just different markets, but different cultures, different healthcare systems, different challenges.
Right, it's a constant balancing act, managing a multinational corporation while also trying to be sensitive to the unique needs of each region. And, it's not just about logistics. It's about understanding the human impact of their decisions.
Right. And like we were saying earlier about that whole drug pricing thing, it's a global issue, but it plays out so differently in every country. Roche has to kind of balance that need to invest in that cutting-edge research, which is expensive, with, the ethical responsibility of making their treatments accessible to as many people as possible.
It's a complex equation. There's no easy answer. But it really highlights that human dimension of Roche's work. They're not just dealing with numbers. They're dealing with people's lives, their hopes, their struggles.
It makes you realize that behind every, financial decision, there's a ripple effect that extends far beyond the boardroom.
But beyond just drug pricing, what other, global trends could impact Roche's work in the years to come? What should our listener be watching for? Well, the rise of personalized medicine is a major trend that will continue to shape the healthcare landscape. And we talked about CAR T-cell therapies earlier, but that's just the tip of the iceberg.
Right. It's like medicine's becoming tailor-made,
It is.
customized to each individual's like genetic makeup and specific needs.
Exactly. And it's revolutionizing healthcare, but it also presents these, new challenges because these treatments are often incredibly complex, expensive to develop and manufacture.
So Roche will need to keep innovating, investing in research, and adapting their strategies to stay ahead of the curve.
Oh, absolutely. And, they're also facing competition from all sides. It's not just the other big pharmaceutical companies. It's also this new wave of biotech startups, many of them specializing in these, cutting-edge therapies.
Like a whole new playing field is emerging. And Roche has to be nimble and strategic to maintain their leadership position.
They need to leverage their strength, their global reach, their deep pockets, their experience to stay ahead of the game.
It's a fascinating time to be watching the pharmaceutical industry, that's for sure. But as we wrap up our deep dive into Roche, I keep coming back to something you said earlier about the human element.
It's easy to get so caught up in the financials, the strategies, the competition. But at its core, Roche's work is about improving human health, alleviating suffering, extending lives.
And that's a powerful reminder that even in the world of business, even in the realm of, financial reports, the human impact is always there, always shaping the narrative.
It's what makes this deep dive more than just a financial analysis. It's a glimpse into the intersection of science, business, and humanity.
Well said. So, dear listener, as we close this chapter on Roche's 2024 journey, we encourage you to remember that human element. Go beyond the numbers, explore the stories, and appreciate the impact that this company is having on the world.
Stay curious, keep learning, and we'll see you on our next deep dive.
Until then, adieu.